Welcome to income tax, one of my favorite topics. And well, certainly most people think of taxes as a burden. They can also be a source of great interest. And the reason for that is because its basis is primarily in law. And the law, as we all know, is an interesting subject. We're going to find that the most important section of the Income Tax Act is Section 3. In here, it lays out the rules by which we calculate income for tax purposes, and it has a number of words in it that are really important. And some of the words are defined later in the Income Tax Act, or you have to dig a little deeper to find out what they're talking about. So let's just take a look at this. It says a taxpayer. So who is a taxpayer? Well, we're going to find out that that includes both individuals and corporations. It also includes trusts, but this course doesn't cover trusts. So taxpayers are individuals and corporations. It then talks about a taxation year. Well, what does that mean? Well, simply for an individual, a taxation year is a year that ends on December 31st. For a corporation, the taxation year is its fiscal year. And it tells us that we're going to follow some rules. A, determine the total of all amounts, each of which is the taxpayer's income for the year, from a source. Notice this part, inside or outside of Canada. So that means their world income, including, without restricting the generality of the foregoing, the taxpayer's income for the year from each office, employment, business, and property. So now we've seen in this very first paragraph the sources of income. So it says a source. It talks about office or employment. The two words are synonymous. We're going to deal with employment income, business, property. And it also mentions here taxable capital gains from the disposition of a property. So there's the fourth source of income. Paragraph B then tells us to determine the amount, if any, by which taxable capital gains and taxable net gain from the disposition of listed personal property exceeds the amount, if any, by which the taxpayer's allowable capital losses from the year from dispositions of property other than listed personal property exceed the taxpayer's allowable business investment losses for the year. So there's a lot of information here, but what we see quite clearly, at least I hope it's quite clear to you, is that the rules are that we are going to include income from employment, business, and property at 3A, and that at 3B we're going to be dealing with taxable capital gains in excess or exceeds allowable capital losses. Now we're obviously going to look at these things in more detail, but this is the framework that everything else is built on. So 3A, employment income, business income, income from property. This part, without restricting the generality of the foregoing, leads to other. So 3A, income from employment, business and property, and other. 3B is taxable capital gains that exceed allowable capital losses. And here it says that exceeds the amount, if any, means that at section 3B, taxable capital gains in excess of allowable capital losses. If they are not greater than, in other words, if the allowable capital losses are the larger amount, the subtotal of B is 0. And there's the rules around it. Now, this section goes on. At 3C, it says determine the amount, if any, by which the total determined under paragraph 3A plus the amount determined under paragraph B exceeds the total of the deductions permitted by subdivision E. So at 3C, we have some deductions that are allowed. They are specifically included in the Income Tax Act at subdivision E. They're not just things that you make up or think, well, it'll be fun to deduct it. They are specifically listed in subdivision E. And again, the language is such that if there is no excess amount, if it does not exceed the deductions, the subtotal is 0. At D, we have determine the amount, again, if any, by which the amount determined under paragraph C exceeds the total of all amounts, each of which is the taxpayer's loss for the year from and now we get some repetition here, employment, business, property. That was very similar to 3A, but this is the losses now, or the taxpayer's allowable business investment loss. So we're going to have to do a little bit more digging to find out what is meant by these terms. So we're going to, as we move on, look at what's included in employment income, look at how you calculate business income for tax purposes, see how we calculate income from property, or is it a loss from property for the taxation year. And we're also going to have to look at how to calculate a capital gain, how to calculate a capital loss, and we're going to look at what is an allowable business investment loss. A little spoiler alert here, it is a special type of capital loss. You'll notice the very end, it tells us that if all of this activity results in a negative number, it's actually going to be equal to 0. So those are the basic rules around calculating net income for tax purposes. The rest of the course is all going to be built on this framework.